Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the WealthyHomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim.
Ross, twice in February, you went after the CMHC here on House Street on just how bad their forecast was. Last May, that projected falling home prices of up to 18% by January of this year. Just recently, Evan Sadal has gone public trying to explain why he was so wrong and begged for forgiveness. Do you think your words had anything to do with him saying, oops, sorry, me wrong?
All I can say about Mr. Sadell, Jim, is that I don't know how many Canadians have been blocked on Twitter for simply stating in a reply to one of his tweets, the word false, which is what happened with our corporate account on Twitter. This is the gentleman who, in a speech early in his tenure, came out and said that his mother earned a 16% compound annual growth rate on their family home over 30 years. And we read the comment and, well, first of all, we heard the comment, couldn't believe it. The publication, CMHC publishes the notes of the speech, and it's right there for you to read. It's still there. Has never been retracted, never have been changed. It's still sitting there. He believes his mother earned a 16% compound annual growth rate on the family home. Now, anybody get a calculator out? Type in $100,000. No, type in $50,000 and times it by 1.16 and hit the equal sign 30 times and see the number that you come up with. Obviously, it's an asinine comment for him to have made, but the fact of the matter is he spoke it. He didn't catch himself. He published his notes. He didn't put a note, I made a mistake. He actually published it, meaning he believed it. Because he went on further to say in that speech, he was being critical of the amount of money his mother had made on the family home. He was basically chastising the Canadian homeowner. And after that speech, we all know what happened. He single-handedly attacked the homeownership market. In-house, we refer to Evan Sadell as the wealth destroyer. WD. That's we refer to him around the office here. Look, Mr. Sadell is leaving his post at the end of this month, and now there's a new CEO coming in. Sadly, they did it from within house. They didn't go outside the firm. I think the problem that you normally have with a new CEO coming in that's from the existing staff is the legacy of your legal obligations to the corporation or to your business. In other words, the reason why I quit being on boards of directors with the organized real estate was because the moment you join the board of directors, you can no longer criticize the board, you can't criticize the decisions of the board, and you can't do anything to harm the organization. So even if the association or the corporation is doing something wrong, legally, which to me means ethically, you're required to keep your mouth shut. So we have a new CEO coming in who was on staff, and I don't know, but I know the moment she becomes CEO, she'll have to remain silent on the incompetency of the corporation, the organization that she's representing. She will no longer have the freedom to go out there and say, hey, our staff was wrong all these years. Now, whether Evan Sadell knows his staff was wrong, or he's just that incompetent, I don't know. But I'm going to believe he's just that incompetent. He came out and he made these comments about, whoa, don't blame us. We didn't know that this was going to happen. We never could have guessed this. Nobody guessed this. Oh, really? Nobody guessed it. No, well, we didn't guess it. But we did forecast it. Obviously, when people are paying for your reports at a professional level, financial advisors, wealth advisors, certain other groups, when they're paying for your reports, if you made a forecast that didn't forecast the prices were going to increase when the housing market reopened up, you would never be able to sell a report again. And I really think that that's what is going on here. Mr. Siddell has relied upon free reports. He relies upon free data. Mr. Siddell does not subscribe to any of our reports. CMHC does not pay for our forecasts, because if he paid for our forecast, he wouldn't have come out and said nobody forecasted this. The only reason he made this comment is because he doesn't pay for forecasts. CMHC relies on the Canadian Real Estate Association for free reports and free statistics. CMHC relies on the big six banks' economists for free reports. Everything that CMHC published, they've received freely. They did not pay for access. Because if CMHC had paid for access, they would have had the ability to go in and fact check. If CMHC paid for access to the Canadian Real Estate Association data, they could ask the Canadian Real Estate Association to supply them all the data. And they could go through it themselves and find out if what the Canadian Real Estate Association is saying is true or not. No. They don't do that. They just regurgitate whatever free reports that they're given by the Canadian Real Estate Association or anyone else. Look, Mr. Siddell is now leaving this post, making one of the biggest forecasting mistakes in the history of the housing market. He is looking to be employed by someone else when he leaves CMHC. He is leaving it after being the author of one of the most ridiculous reports on a housing market that has ever been released. The irony here, Jim, is that in his own comment that he sent out, obviously, we have multiple Twitter accounts. So in other words, when someone blocks us, if they think that we're not reading their comments, we've got other accounts that we're reading. So we know what he said. He came right out and said, we didn't know about the change in the compositional mix. Wait a second. Did he just admit that house prices change because of the compositional mix? In other words, if that's the reason why his forecast was wrong from May of 2020 till January of 2021, doesn't that mean the same rule would have applied for the last 40 years of CREA data? That the compositional mix was never the same from month to month? When we come on this show and we talk about the share of sales, isn't that exactly what we're saying? What we're saying is the average house price has nothing to do with average house price. The average house price is measuring the wealth of the average buyer who is active in the sales that are reported to that MLS system in the reporting window that they're claiming to be reporting for. It's got nothing to do with house prices. When we look at the stats from our real estate board, we see the compositional mix within a second of looking at the report. It's there in black and white to our eyes because we know how to read the free reports that are available to anybody in Canada from your local real estate board. But you need to be trained in how to read those reports because that's the free data. So the free data, you have to be able to go in and adjust and change or manipulate to get the true data out of it, to get a true understanding. Mr. Siddell stated in his comment, the reason why our forecast was wrong was because we didn't get the compositional mix right. The composition of sales changed. Oh, okay. So the Canadian housing stock didn't change. There's the same number of single detached, same number of semis, same number of townhomes, same number of condos, same number of rentals. That doesn't change. The only thing that changed was the mix of homes that was being purchased. Oh, so in other words, wealthy home buyers were buying more expensive homes, and the average price went up. That's why you were wrong. Mr. Siddell admitted that's why he was wrong. Okay, so now let's go over the last 40 years of data and tell the public each month how wrong you were, because that's what we do. That's what we are paid to do. Mr. Siddell is receiving free housing market advice the same way that the public uses free average house prices. If you get something for free, generally speaking, the person who's giving it to you is giving it to you for a reason. If it's an old television that someone's giving away for free, it's probably because they can't sell it for any money. Here, please take it so I don't have to take it to the garbage. If someone is giving you free house price forecasts, it's because they can't sell them. Because if they could do it accurately, like we do, you'd be able to sell that product. You wouldn't have to give it away for free. We've had listeners come in and ask questions. Why does Mr. K not go on, why don't we see him more on television? Why doesn't he go on and talk in these shows? We hear him on House Street, but then we don't hear him talking on these shows. I am not going to go on national television and giving a partial story about the housing market for free. If I'm going to give someone a story about the housing market, it's going to be the full story, which they're going to pay to receive. When we come on this show, people say, well, often it's hard to understand what Ross is saying. Or Ross is saying one thing and he's saying another on the other hand. That's because you're receiving the free version of this advice. I have to qualify everything that I say on this show to meet the requirements of the average homeowner in Canada. Okay? So because I can't really do that, I'm only giving you a partial side of the story with each question that I'm given. If someone is paying me for the advice, I'm going to give them specific information for their specific situation, for their specific housing market, for the specific MLS system that housing market is located in, for the specific category of home that they're looking at buying, for the specific amount of mortgage that they're going to carry, for the specific month of the year that they're looking to buy it in. All of that specificity makes the information that we're giving priceless. I mean, we turn people's lives around, Jim, with the information we're able to provide. Mr. Siddell is destroying lives. Mr. Siddell is on a mission to get the Canadian public to rent for their lifetime. He is on the record stating there's nothing wrong with renting. Okay, if there's nothing wrong with renting, which I'll agree with, show the public the data that supports your conversation. I can show people why they can have a life of tenure, a life of tenancy, and be just as wealthy as if they lived a life as a homeowner. I can show you the data. The data that I show you, or the strategy that I lay out, will be precise and to the penny, and you can fact check it yourself with a calculator. It's not going to be what you hear from everybody else, which is so ridiculous most of the time, because they're not explaining what the life, how your life is going to have to be set up to live a wealthy life of tenancy. You need to structure your life in such a way that you're not able to lose wealth. And that's really, really, really difficult, Jim. The easiest way that we can have someone build wealth is through home ownership. It's a natural life event. You don't have to worry about it. Then from that foundation, you can earn multiples of wealth. If you simply accept the reality of the housing market and you have the numbers laid out before you, and you believe in the information adequately, you have no fear. When fear is removed, all of a sudden you're able to do things that people have never been able to do since home ownership began. And that's probably going to be the most transformational aspect of society as we move into 2030 and beyond. Because by 2030, I believe that these realities of home ownership are no longer going to be just held by us. I could show Evan Siddell when he goes to a meeting, Jim, and he wants people to rent, and he says, you should rent. There's nothing wrong with renting. We have this fascination in this country with home ownership. Well, first of all, always going to qualify. Your number one life choice should be that of a homeowner. That should be your number one life choice. Because as for average advice, that is the best average advice that you could give the average Canadian. Specific advice is another story. And if Mr. Siddell had a couple or a family who was able to structure their lives to build wealth through tenancy, so be it. But you need to lay out the plan that these people are going to have to follow. We did a plan the other day, Jim. We did a plan the other day for somebody who is going through this process, and they were looking at Toronto. We showed them how just one component of their home purchase was going to effectively, if they didn't buy, they could have turned it into $250,000. A single component. And they said, wait a second, nobody ever told us that before. And then, of course, the discussion goes, well, if you're showing us this as a renter, what does that mean to our home ownership situation? Well, and then we have to explain to them on the home ownership side how you negate that loss of $250,000 over 40 years. Let me qualify that. Mr. Siddell can't do that either. Because if he could, for the last 5 years, he would have been out there giving you the guides and the resources and the reports to how you could do it. Mr. Siddell has lived his entire CMHC career on the free advice, the free stats supplied to him by stakeholders in the real estate industry, bankers, realtors, economists, bond traders, housing analysts, housing analyst companies. They all give him this information for free. Well, guess what, guys? If it's worth nothing, go ahead. Give it away for free. And the result is you make the biggest housing forecast mistake in the history of Canadian real estate, which is what the legacy of Evan Siddell will be.
By the way, Ross, I took your $50,000 house, 50,000 times 1.6, 16 times, like he said his mom's house went up 16% compound interest. That $50,000 house would have been worth $92,233,000 in 16 years.
Oh, Jim, you're priceless, buddy. You're priceless. Okay? Imagine, Jim, what we've been saying on this show for years. Every news reporter in Canada, every journalist in Canada who covers the financial markets, every blogger, every realtor, every mortgage broker, everybody who thinks they talk about housing markets, they missed the simplest of simplest falsehoods. They missed it. You should see what they missed this week.
We'll talk about that when we return.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, it's Wednesday, and already we have major real estate boards across Canada reporting on February's housing market. They're saying everything's up 6%, 9%, 12%, depending on the region. Are the prices really up 9 to 12% over the past year?
The compositional mix of housing that is sold in a single month changes from month to month. It follows a cyclical pattern, which we call the sales chain. It has been this way since I started selling real estate in 1987. It's how my mother and father retired wealthy as simple real estate salespeople. It has gone on. My great uncle relied upon the sales chain when he launched his first brokerage in the 1970s. It has never changed. It was called the average purchase price until Greg Klump was hired by Korea for a reason. Evan Siddall, as we talked in the last episode, mentioned compositional mix. If you read through the housing analysts that are releasing commentary lately, all of a sudden, magically, the term compositional mix is appearing in their quotes. I read TD Economics today, who said, the sale price for the end of the year is Canadian home sales are going to set a record again in 2021, and prices are going to be at XYZ because of the compositional mix. Oh, so you're admitting it's got nothing to do with house prices. You're admitting in writing on your own bank website that house price change has nothing to do with house prices. It's got something to do with the composition of homes purchased in a month. Yet you're not going to go back and say, oh, wait a second, we lied to everybody for the last 40 years. But we're actually reporting, when we report house prices, the average house price is house price illusion. That illusion is caused by the shifting compositional mix each month. This is right in front of you in the data, CMHC, Toronto Dominion Bank, if you're able to read it. What did I hear this week? Look, Jim, here are the stories that we've already heard this week. I want your listeners to understand, okay? So I understand that the listeners go out and look in the MLS, and what they're hearing from the real estate boards appears to be true in the MLS houses that they see for sale or the sold sites that they're looking. I understand that what you're hearing, you eventually see to be true. I understand that, and I'm not disagreeing with that's what happens. What I'm disagreeing with is the illusion that is required to make you believe that, which in turn becomes the fact. If you purchased a house in the last 2 months, you certainly paid the increase that the Canadian Real Estate Association told you had to pay. You did that. You made that huge life-altering mistake. You actually believed that. If you bought a home in one of the peripheral markets, let's say Halifax, or let's say London, Ontario, or even let's say Abbotsford out in British Columbia, you paid a price that you didn't need to pay because the local real estate agents told you that that's how much that house had increased in value over the last year. You did that. So the fact when you were buying a house in Halifax, the price change that they recorded had more to do with builders listing huge brand new homes that don't even exist in the marketplace on their MLS, and that a wealthy Ontario homeowner from the GTA decided that they would move to Halifax because houses are cheap out there, and they immediately themselves went in and bought that $600,000 house, which was cheap in Ontario, but was super expensive in Halifax. And when they bought that home, because there wasn't a $400,000, a $200,000, and a $150,000 sale behind it to lower the average, the only average they saw was $600,000, which the local real estate board said house prices have gone up. That's what you have been led to believe. Listen, here's some of the absurd comments that are buried in the MLS data, which appears in charts from CMHC, every single one who comments on the housing market, every single Canadian bank, everyone. This is what their charts are actually saying, their charts for 2020. They say that every 1 in 10 homeowners in Burlington, Ontario, traded homes last year. Understand, folks, they're saying that people in Burlington, Ontario, families in Burlington, Ontario, if you look up and down your street, within the next 9 houses, one of your neighbors moved over the course of the year. That didn't just happen your street. That happened every single place in the city. They're saying that something that has never happened in the history of Canadian real estate happened last year. Oh, but it only happened in Burlington, Ontario. They reported that over 6,000 families, homeowners in Burlington and Ontario traded homes last year. 6,000. It's in the charts, folks. It's buried in the data. You believe it. Yesterday, the real estate board for the greater Hamilton area reported that their sales were up 15% year over year. Oh, 15%. For the entire geographical area of the greater Hamilton area. Technically, the third largest real estate market in the country. Yet the Toronto Real Estate Board came out today and said, our sales are up 52%. So you go a couple miles up the road, up the QEW in Ontario, and all of a sudden the market is so hot, it's up 52%. It's only 15% up in Hamilton, but it's up 52% in Toronto. And people believe this. The Toronto Real Estate Board says sales in the city of Burlington in February were up 52%, but Hamilton said, oh, sorry, they're only up 28%. You see, as I've said in this show for the last couple of years, the reason why I understand how MLS systems work is because I was lucky enough to be trading real estate with a real estate license in the city of Burlington, and 3 generations of my family had done so. That gives us a unique perspective that only realtors in Burlington, Ontario ever had the opportunity to understand. I'm sitting in a market where right now today, in news reports across the province of Ontario, one real estate board is saying Burlington increased by 28%. The other real estate board is saying it increased by 52%. The one real estate board, the real estate board in Hamilton, said our sales are up 15%. The other real estate board, Toronto, says that their sales are up 52%. Yet nobody's out there helping the public weed through this because they're all, as we said in the first episode, free information, folks. You can get all this free advice from all these folks that you want. Anybody's giving you free advice, take it for what it is. I just debunked one. I just debunked a massive one. Not only was that, the price change. Now, people say, well, Ross, that's a one-off. Oh, it's a one-off. Okay, folks, go to the Canadian Real Estate Association website and look at their benchmark price model. Did you know that the city of Toronto, the realtors of Toronto, produce dozens of benchmark prices for every city that they supposedly cover? But when you go to the Korea website, you can't find those. Well, don't you think if the Canadian Real Estate Association was the one producing this, and they tell everybody go to Korea Stats or the HPI, that they encourage CMHC, governments, bankers, everyone to use in their charts, they would put the data on that website? No. They can't put the data on the website. Why? Well, Burlington, Ontario is your answer, as it always is. You see, the Realtors Association of Hamilton, Burlington never produced a benchmark price because when the Canadian Real Estate Association came out with the idea of the benchmark, it was too unethical for the realtors at the Hamilton Burlington Real Estate Board to approve their membership to participate in. The Toronto Real Estate Board said, no way, we can use this to sell commissions. So they joined the MLS. So even though they had no market share in Burlington, they started producing a Burlington MLS, a Burlington HBI. Well, guess what now? We're years later, and a year and a half ago, the Hamilton Real Estate Board finally caved in and started producing the benchmark price for Hamilton. But guess what? They don't produce one for Burlington. Burlington is rolled into the Hamilton report, which is what you find at the Korea Stat. You are being manipulated in ways that you have no idea, folks. These realtors that are talking to you, they're manipulating you in ways they don't even understand because they didn't have 3 generations of their family selling in the MLS central point in Canada. Look, folks, let me explain something to you this way. Depending on the province or the state that you live in North America, the rules that govern the MLS systems in your state or province will dictate the maximum amount of house price growth that is possible in a month, in a calendar year. Over the long haul, 30, 40 years, that the structure of your state or provincial MLS system the rules that govern them, will dictate how much house price growth happens in those provinces or states. This is why British Columbia has a higher compound annual growth rate in house prices than Ontario does. And it's why Quebec has a lower compound annual growth rate in house prices than Ontario does. And it's why Alberta has had a different compound annual growth rate in their house prices than the other provinces do. Because the MLS systems that produce the average price used for the last 40 years in those provinces has a limit of the amount of house price change that is going to be reported in a year. Well, what do you mean, Ross? Well, I just gave you the Burlington example. In Ontario, we have a competitive MLS infrastructure. In Ontario, the Toronto Real Estate Board is fighting to get market share in Burlington, and the Hamilton Real Estate Board is fighting to maintain market share in Burlington. In Oakville, the Oakville Real Estate Board is fighting to maintain market share in Oakville, but the Toronto Real Estate Board is trying to take market share away from those members. Those two real estate boards signed a mutual agreement back in April of 2019 to share real estate information, to share the MLS information between one board and another. That changed the rules. You didn't hear that reported anywhere. You didn't hear any comment from any of these guys that are on TV talking about the GTA real estate, about this deal that was signed. But the documents are there. Anybody can go read them. Your MLS system changes the maximum amount of house price growth that is possible. In British Columbia, you have clearly defined geographic boundaries that your MLS systems operate in. And that's a rarity. Okay, that is a rarity. That means you're going to see higher house price gains in British Columbia simply because of the way the geographical limitations of the MLS systems. That means that when a buyer leaves Vancouver and purchases a home in Coquitlam, that is going to mess up the average selling price in those two boards. It's going to really, really mess it up because there is no crossover in data between the two boards. The lack of crossover in data, trading data between the two boards, means that you're going to have a higher rate of house price growth. If I go back and I look at the last 40 years of each provincial average price published by Korea for the province, you're going to see this in the data. Everybody thinks, British Columbia is different than Ontario. Yes, it is different. Your MLS system is different. MLS systems, as we have said on the show before, are Ponzi schemes. They're designed with the sole intent of having house prices increase higher than the average commission rate charged in the province. In British Columbia, because you have geographical limitations of your real estate boards, and you don't have the cross-population of trading data between real estate boards, the amount of house price gain in the Ponzi scheme is greater. That's all. It's nothing complicated. It's just a difference. That's why in Alberta, they totally revised their MLS reporting rules in 2016. So you have to change the maximum amount of house price gain possible in an MLS system because those rules changed. Everybody thinks that this is a natural thing. They're always seeking to find an answer somewhere else. CMHC is spending millions and millions, hundreds of millions of dollars trying to get an answer. Everybody's trying to get an answer. Well, guys, you can't get an answer if you don't understand what the system is built to do. The home trading infrastructure is built with the sole purpose of allowing your local real estate broker to earn the average commission rate that's possible in your community. That's it. And over the long haul, that's exactly what gets reproduced. Folks, there is a reason why the 40-year compound annual growth rate in house prices goes the way that it does. These periods of huge price growth that we've seen since April of 2020 through till today are solely a result of what the MLS system is designed to do. Now, I'll end this section with one thing. Ross, what could CMHC do to stop house price growth from getting out of hand? Ross, what can the CMHC do to rein in house prices? They've already pulled back the maximum amount of money you can borrow to buy a home. They've already cut out a whole bunch of buyers. They've already cut out foreign buyers. Well, provincial governments have set rules to try to cut out foreign buyers. They've changed all these rules, Ross, but nothing works. Well, it's not going to work because how the MLS system is designed. The MLS system is designed to get a higher price to cover the commission. What CMHC can do is this. CMHC should only, and they should have been this way since 2002, approve the amount of mortgage based on the appraised value of the property 365 days ago. In other words, if you want to buy this house for $600,000 and last year it was appraised at $500,000, we will lend you only enough money as if it was worth $500,000. You have to come up with the extra $100,000 in cash if you want to buy that house. Whoops. All of a sudden overnight, your housing market is done. All of a sudden overnight, people are no longer trading homes. All of a sudden overnight, you can actually go and listeners, this is why this is so hilarious. If they had instituted this in 2002, okay, it meant that a standard 10% down home buyer would have always been able to buy the home they wanted to buy because they had that 5% extra that house prices increase normally, the way the MLS system is built to have house prices increase. They always had that extra 5% there. They only needed 5% down, but they had 10% down. So they had the extra 5%. So even if CMHC said, "Hey, no, I'm sorry, we're only going to lend you 90% because this house last year was worth 5% less," you still had the 10% down that you needed. There was never a risk to anyone except real estate brokers because the MLS system is designed to return the average commission rate charged in a province. Now, you have to go back in and, well, Ross, it's not, of course it's not relevant today. You've got to average it over the last 40 years because these little tiny cycles that we're seeing where we see these great house price growths, your MLS system is designed to do that. It wasn't designed to have policymakers extend these up and down cycles within a housing market, which is what every single policymaker in Canada has done since 2013.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been homeownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.